Hello, everybody. Welcome back to another Master Friend Essentials. This one is by popular request, the Fibonacci tool and how I use it with trends. So let's get down to it. First of all, when you pull your fibs from low to high, your extensions go down. So, to my knowledge, you have to do this on a PC or like a computer to add negatives on your fib tool. Okay, so this is just your standard fib retracement, and that's how I set my fibs up. That way, my targets, when I go to pull my fibs, they go up and I don't have to keep flipping them all the time. Okay, so we're going to go over a position that I took with the group so it doesn't feel like left side of the chart hindsight stuff where I'm just showing you, oh, this happened here. No, no, no. We took this trade together. And anybody who wants to call me out can say so in the comments. So we've got a nice downtrend here. Very good. And I'm looking for that nice shift in structure. It's got to be convincing. Like there was no swing high in here being blown out. And yes, I'm in the 5 minute. It's a good time frame. There was a swing high here, but not really breaking. You know what I mean? Like there was no violent close above. It came down for another low. Then all of a sudden you have this dynamic move. Now this is where I start to get interested because now we've clearly shifted structure. It's ran for that swing high right there. So that's a break in trend. Now I'm pulling my fibs and I'm really interested. Now I'm not looking beyond these candles. Okay. I'm looking right in here because you got to, when you're doing your back testing, you got to do it like this. You got to imagine that price hasn't come over here yet. So you're kind of moving your screen over and you're going, okay, well, what happened? We broke trend here. We did a higher low. So we've got a trend break. And then it takes this high here and it's trending up now. And we're like, okay, great. So because it made a swing high here and a swing low here, now I'm going to pull from here. So this is where things get a little confusing because people will always ask, like, how do you know where to pull your fibs perfectly? Look, I don't. When I'm trading live with you guys, I don't know where to pull them perfectly, but I've given you the elements I use to frame the probabilities that it's likely going to be in my favor. So let's keep scrolling along here and see what goes on. So we're looking for the higher low to continue on up into this high up here. And again, I took this with you guys. This is not cherry picked. So we see that the 786 is indeed touched. Now, do we make a swing low there? Yeah. So put your trade on and see if it hits. No, it doesn't hit. It gets stopped out. So this is the point where things become a little bit confusing because you can be like, oh, I lost the trade. Well, if you're risk appropriate, you won't care about a losing trade. But this is where I then pull my fibs to the next low. Suddenly, we've got a beautiful swing low in that 786. Now, why do I trust this retracement more than I would trust this one? Well, there's a couple of reasons, but because this is the total range that the price made here. So I could give it the benefit of the doubt and play that swing low and give myself maybe a wider stop, up to you. How you make this model will be unique to you. But if that happens, I'm then pulling from this low. So let's see what happens if I would have taken another shot on that candle. Well, it was almost immediately in profit, just a little bit of drawdown. This one had to wait till all weekend, all Saturday, and then finally, bang. She starts ripping out of control eventually. Yeah, Saturdays are pretty lame, but there you go. So the trade then playing out afterward. But the fibs will help you determine your premium and discount zones, which is counter logic to buying and selling pressure. Because why on earth did the sellers just stop selling off right there? I'll leave that up to you to figure out. Now let's talk about the fib extensions. typically on an intraday scalp, I'm targeting two deviations of whatever price swing I'm measuring. So in this case, I'm measuring from this candle's low to this candle's high. My first target is half of that price. So divide that in half and put that above the market. And then the first deviation or symmetrical price swing above the market, and then 1.5, then 2, and it can extend much beyond there. It's crypto. And yeah, those price points get hit quite nicely. So I'll leave that for you guys. Happy hunting.